One stock to watch, of course, at this open. Tesla helping that NASDAQ 100. Shares jumping after reporting record Q2 deliveries.
You guys, I just don't see how you can have price targets like this. It just, I guess it's a commentary on the stock and how people feel about Tesla and Elon Musk.
I think this was it was a jaw dropper relative to many expecting softness. I think those price cuts, that was the poker move that they really needed to make.
They're now basically halfway towards 1.8 million, and almost everybody agrees, unless something dramatically changes, they will hit that target.
The fact that when it comes to Tesla, the AI component of the story is full self-driving. It is autonomous vehicles. It is something that we've known about and has been in the market for a really long time. Why should we all of a sudden be applying that much more value to it in the last 8 months when everybody's been consumed with excitement about large language models?
All that and more, so let's get to it. Heels of Tesla's Q2 delivery numbers, Tesla up almost 7% on that half day. Year to date, Tesla up over 150%. Taking a look at the options contract that I purchased on June 29th, not doing too bad. With an expiration date of July 14th, I'm hoping to take advantage of the buy the news run up into earnings. It would be easy for me to just take the profits and run, but I've got a plan. I don't plan to make any decisions on this particular contract until next week.
One stock to watch, of course, at this open. Tesla helping that NASDAQ 100. Shares jumping after reporting record Q2 deliveries. Baird's Ben Callow writing, quote, "It's a big beat. People were still bracing for another round of price cuts, but these numbers make that less of a risk." Joining us now, my friend, my co-host of Bloomberg Technology, Ed Ludlow, on the case. And, I mean, it was a big beat, but not only, it seems, for Tesla in terms of EVs.
Yeah, a lot going on. Numbers flying around the world from all kinds of EV makers. Tesla delivered 466,140 units in the quarter gone. That was a big beat relative to the Bloomberg analyst average estimate of 448,350, up 83% year on year. That delivery beat, which is interesting. It shows that they continue to grow at a phenomenal rate. What's interesting is it's still a case of Tesla producing more vehicles than it's delivering, but Ben Callow, among the analysts, noting that the gap is actually shrinking.
The gap doesn't matter. Tesla has to deliver the vehicles regardless of where they make it. It takes time for some of these vehicles to get to their destination. I don't understand why people don't get this.
Less concern in the market now about further price cuts, but we also got numbers from BYD. BYD almost doubled its deliveries of battery electric vehicles to 352,000. You were noting in that LinkedIn post earlier, right, Caro, that you throw plug-in hybrids to the mix, and BYD delivering more than 700,000 vehicles in the quarter gone. Ooh. It's the biggest brand name going when it comes to China. And remember, in that market, many more players, many more models. Tesla faces much stiffer competition there, though it's the clear market incumbent here in the United States. Real quick mention of Rivian. Those dropped this morning as well. Production number 13,992, delivering 12,640. Real ramp up from their own production numbers in the first quarter. They've shifted a key component in-house, the Enduro motor. They were using an off-the-shelf product from Robert Bosch. That seems to have helped them address some of the supply chain bottleneck that they had, and that stock, well, up almost 9% in early trading.
Good on Rivian. Take as much from the Tesla playbook as possible. Vertical integration is your friend. Do it yourself. I look forward to seeing the continued improvement of Rivian.
With more on the run so far this year, Craig Irwin, Roth Capital Senior Research Analyst, and Ray Wong, Constellation Research Principal Analyst. You guys, I just don't see how you can have price targets like this. It just, I guess it's a commentary on the stock and how people feel about Tesla and Elon Musk. I checked the numbers to see if they were right. Ray, you have a buy on Tesla with a $320 price target. Craig, you have an $85 price target.
This is why Tesla is such a volatile stock. $85? At least our boy from Constellation has a buy. His base fair value estimate is still underneath my bear case, $364 in my worst case scenario. But he's much closer than Craig.
You guys are looking at this. You're looking at the same thing. Craig, Craig, you had a hold too. When did you put that 85 on there? Did you? It was in 2000. When did you put it on?
It's been on for like a year and a half, 2 years right now. I don't remember exactly when I put it on.
Your privates are in a vice, man, Craig, aren't they? I mean,
Damn! Getting savage in the morning like that.
aren't you howling in pain? Huh?
Heck no, man. Heck no, right? The point today is price cuts work, right? There's demand for EVs out there. EVs are something compelling to a tranche of consumers. EVs are inevitable, right? That is the punchline today. But when you step back and you say this 6% move is a $50 billion increase to the market cap, and you look at the market cap of Ford today at just $60 billion, that puts it very clearly in context. Tesla has more than 100 other competing EV models coming to market to compete against their four mainline units. You know, many of those are going to be wildly successful. The same pressure we saw in the back end of last year that brought this thing basically down to 100 is going to build into the end of this year when those models actually launch, and it's going to intensify next year. So the valuation, it's absurd. It's egregiously overvalued.
The problem with Craig's argument is that he assumes that everybody's going to be able to make electric vehicles just as good as Tesla, when that's just not the case. But let's just say an auto manufacturer does produce an electric vehicle just as good as Tesla. How fast are they producing it? At what cost? Are they making any money off that vehicle? These are the questions that Craig fails to adhere to. Tesla is going to make 2 million vehicles this year, and while second place is hoping to make 1 million pure battery electric vehicles, and that's a company in China. When you're talking about America, there's no one close. They'll be lucky to make 60,000 battery electric vehicles. Those numbers will increase. All the other OEMs will eventually be making millions of battery electric vehicles. But by the time that passes, Tesla will be making tens of millions. Everybody will sell battery electric vehicles. That's a no-brainer. Question is, will other OEMs be making money on their electric vehicles, and how many can they actually produce once they start making them profitably? Those are a lot of big questions, and that's why Tesla's evaluation is magnitudes higher than any other auto manufacturer.
This long, it's a company that's executing. That's why I don't have a sell rating. I have a neutral rating because I got a lot of levers to throw.
Well,
right?
that's bizarre. Craig, you got an $85 price target. How can you have a? I mean, you should. It's a 277. That should be a sell rate. Nothing about what you're saying makes sense, Craig. And I mean, I understand it could happen, but you got to acknowledge it. If you were a customer of Roth or a client of Roth, and they were following your advice, and they watched it go from wherever it is back to where it is now, they'd be saying, you know, that's putting a lot of faith in you being right eventually, Craig, right?
Damn, the burns keep coming. Look out, Craig. Joe's got you on the ropes, bro. Bob, weave, he coming at you hot and heavy.
70% of the CIOs out there say there's no way they would buy something like Tesla. You know, the guys that are long Tesla are momentum players, right? They behave a lot like retail in the way they trade things, but they move much faster and have much higher quality information. And many of them don't fundamentally disagree with me at all about the issue back end of the year.
Ray, do you disagree, Ray, with
I think, look, this is a market cap raid. Right? There's massive automation, fully integrated supply chain, optimization of government subsidies. There's no other car company that can beat them at this game right now in terms of scale, other than BYD in terms of in China. And so they're taking market share and market cap from all the other players. And so the goal is to get as many vehicles on the road as you can to get their AI out there, get their mapping out there, and ultimately get to self-driving. The end game is not to be just an EV maker. It's multiple business lines that people are betting on, from insurance to self-driving to energy generation and distribution. So cars are just part one. And if I was Craig and I'm looking just at the car side, I'd agree with him. But all the other things on the other end of that raid makes a big difference. And with a $9,500 profit margin to play with versus GM at $2,100 versus Hyundai at $1,000 or Ford at negative $760 per vehicle, they're taking market share and they're taking market cap.
Now, Ray Wang, that guy gets it. He was able to sum it up in just a brief few moments. No notes for Ray.
Let's bring in Dan Ives, of course, of Wedbush Securities, a frequent guest for that seat right there. Love the green pants.
Thank you.
Sorry we can't get those fully on camera. But let's start off with what you've been talking about. You've been very bullish on Tesla. You've been right, Dan. What do you make of the deliveries?
I think this was it was a jaw dropper relative to many expecting softness. I think those price cuts, that was the poker move that they really needed to make to put an iron fence around their install base. China, I think that's really ultimately the catalyst. And this for the bulls, I think this is really an inflection point. It feels like right now they're just getting stronger. And in terms of electric vehicles, it's Tesla's world. Everyone else paying rent.
But, you know, the point Mike and Phil both made is we're still really at 1.8 million for the year, which is where we started. Estimates for the company have actually come down. So has this actually been the reason the stock has added, or the company's added 400 billion in market cap? And if not, what then, and is it justified?
Yeah, and obviously great points that they make. But I think what this has really been, it's about the AWS moment, the supercharger. That's really what changed everything. In terms, I think investors now are starting to realize the sum of the parts of this story is starting to get realized. And even though the next quarter or two, margins will trough out in terms of, I think ultimately expand to Q4 in next year. But the supercharger, batteries, and of course AI. I think right now, not given credit from an AI perspective, which is why now you can maybe start to rationalize, is this $1.5 trillion or higher? As this all plays out in terms of the Tesla story.
Well, I mean, I guess we should mention it did trade at 1.2 trillion once. It went from 1.2 to 400 billion, so it lost 800 billion. It's regained half of it, essentially, over the last couple of years. But again, I keep coming back to this idea. If it is this huge open-ended, AI play, they're going to be the mobility utility for the world, and it's a software company, great. Why should I care about $10,000 upside for units in a quarter? If that's the context, then why are we trading 6% higher on a roughly as expected number? And you say bears should go into hibernation. I don't think they are. Bernstein here, $150 price target. We struggle to justify the rally in fundamental terms. The clearest sentiment catalysts have been market perception of Tesla as an AI company, as well as Tesla's charging standard becoming the de facto standard in North America. Neither appear financially material to Tesla.
There's no way that Tesla's going to have market share of any one particular aspect of their business, whether that be EVs, battery storage, solar generation, on and on and on, robots. They're not going to be the only game in town, but they will be the best. That's what Tesla hangs their hat on. If they're going to do it, they're going to do it the best that they possibly can. And by default, will be better than any of their competitors in that particular industry. So yeah, the market's going to react according to its understanding. But as the edges of that map gets filled in, Tesla's going to the moon. Question is, are you going to have a seat in VIP? Or are you going to be on the ground looking up, thinking about what could be?
Bears, they hate it at 20 billion, 50 billion, 100 billion. And where it is today, they're always going to have that view. My view is this is just a transformational growth company. It obviously went through issue in terms of the price war, but now that ultimately they're playing chess, others are playing checkers. It's paid off. Margins are troughing, and investors now are starting to realize that dream scenario as they get through to 2 million units, to 3. Cybertruck comes out later this year, and then that sum of the parts. That's why right now this is just another flex the muscles moment for the bulls. But the bears, they'll continue to yell fire in a crowded theater.
But to Mike's point, when does that actually trickle down to the fundamentals? Because if you use kind of that AWS example, perhaps when you can really monetize the supercharger, the AI and all of that, you can keep those prices low and keep volume churning. Is that ultimately kind of what your calculus is? And if so, when do they get there?
And it's a great question. I think the other thing is that from a battery perspective, they now could potentially lower costs over the coming years 30 to 50%. You start to factor that through. That's where ultimately, then there's the drum roll to a sub $30,000 vehicle. That's where demand really starts to expand. And this green tidal wave, this $5 trillion green tidal wave that we call that's playing out, it's not just zero-sum game. GM, Ford, others, Rivian, 313 area code is going to be successful doing it. Biggest transformation to the auto industry since 1950s. But this was the quarter. The bears were saying, this is it. They're going to miss the quarter. And ultimately, they go into July 4th with fireworks, as I believe this was an inflection quarter.
Yeah. Cash register, I think you're right. There's opportunity here. Everybody wants to know, when can Tesla monetize this AWS moment? By the time you realize it, it'll be too late. The goal is to get in on the ground floor and then have the elevator take you up. But opportunity abound for those that can anticipate what's beyond the horizon. What do you see?
David, I want to show you where Tesla is in terms of hitting its annual target, the guidance that they put out earlier this year to deliver 1.8 million vehicles after exceeding expectations for the second quarter, delivering 466,000 versus the estimate of 445,000. They're now basically halfway towards 1.8 million, and almost everybody agrees unless something dramatically changes, they will hit that target because they're expected to increase production and increase deliveries in the second half of this year. So what are the takeaways from the Q2 delivery results? First of all, how much have price cuts hurt margins? There's no doubt that price cuts did stoke sales in the second quarter, especially in China, but at what cost? JP Morgan out today saying, look, we're still going to raise our Q2 estimates, not by a lot, but they are raising them. And then the question is also, is the share price growth limited? By that, we mean take a look at what the stock has done year to date. It's up more than 100%.
But it's down from all-time highs, almost $400 billion. What are we talking about here?
Earnings estimates have come down since the beginning of the year. So you've got a stock that is appreciated at an incredible pace while the earnings estimates have come down, and it has more than a few people saying, even with this pop today of 7%, this stock is unlikely to go much higher. So I'm not sure if we're going to see shares of Rivian if they pop up here. That's the question that's out there for investors right now. I also want to point out shares of Rivian. You guys talked about it about a half hour ago. It also reported its Q2 delivery and production results. Two pieces of news here. First of all, deliveries of just over 12,000 vehicles, up 60% compared to the first quarter. So you're seeing the acceleration in deliveries. And in terms of production, the production number is over 13,000. The company reiterated its target of producing at least 50,000 vehicles this year. And that's why shares of Rivian moving higher. And by the way, almost all of the EV stocks moving higher on the numbers from Tesla and now also from Rivian. Clearly, you see an acceleration in the delivery cadence and the demand that's out there for electric vehicles.
Makes you wonder where the recession is. I guess some people still have the gumption to buy large manufactured objects with incredible interest rates.
Competitive map looks like at this stage because you've got record numbers from Tesla, BYD, Rivian. You know, are any of them taking share from the other, or at this point is it just the tide is lifting with all the boats?
Depends on where you look at it, Leslie. If you're looking at it on a global scale, it's a case where they're not necessarily taking it from each other, but they're increasing their sales at the expense of everyone else. And BYD, by the way, was nipping at the heels of Tesla in terms of global EV sales. It may, in fact, overtake Tesla because of the strength of what it's seen in China. If you're looking at the U.S. market right now, about 64% of the EVs that are sold are Tesla models. And the expectation is that that market share is going to drop as you see more models come out from GM, from Ford, Stellantis through GM or through Jeep and through Ram are going to be ramping up their EV production. But we're not seeing that yet. And that's part of the bull argument out there, which is, okay, where's everybody else? The party has started. There's demand there. And yet you really only see the growth. And you're also seeing it from Rivian here, but you really see it from Tesla.
I can't say this enough. Anybody producing battery electric vehicles, whether that be Tesla, Rivian, whomever, their only competition is that of the internal combustion engine variety. BYD's competing with themselves. But as more and more people choose the battery electric vehicle option, your internal combustion engine sales, hybrids or otherwise, they will collapse. As sentiment changes from that ICE vehicle to the battery electric vehicle, all of these manufacturers producing battery electric vehicles need to get better. Rivian's delivery numbers are nice, but I'm more concerned about how much they're losing with every vehicle sold. That's the kicker. Are they benefiting from economies of scale enough to where they can start making money? All of this stuff is moot. That's why Tesla's valuation is so high, is because not only are they producing the most battery electric vehicles, but they're doing it with industry leading margins. That's a no-brainer. They're making the most and making the most with each vehicle sold.
George, good to have you here. You heard Phil, you kind of break down the delivery numbers. We got whatever you want to call it, a 10 or 15 or 20,000 unit beat relative to forecast, and we got 50 billion in market cap added this morning, and the stock is almost at your target of 293. So how should we be thinking about the what's already implied in Tesla's market value, and where do you think it can go?
Look, Tesla for us is an incredibly powerful long-term story. As we've talked about over the last 6 months, they did something that was pretty smart, in our opinion. They cut prices to stoke unit demand in the hopes of, over time, increasing the penetration of their FSD software. Right now, that FSD software costs $15,000, and we estimate that globally it has about high single-digit penetration rate. Over time, we expect that to get a lot higher, and we're in print saying that we think that the company should probably lower that price from $15,000 to probably something like $10,000. And so when you think about what that does to the margin profile of the firm over a long-term period, it's huge, right? Right now, as Phil alluded to, the company broke its promise, and its margins, its auto gross margins were below 20%. They were 18%. Now those margin expectations are subdued for the rest of the year. We think there are some tailwinds even in the near term because those price cuts kind of stopped over the last couple of months. But over a long-term period, if they could increase that penetration rate of FSD software, which is real-world AI, the margins of the firm should go a lot higher over the next 3 to 5 to 10 years.
They're not lowering the price of full self-driving. While many people are in the camp that Tesla's doing it wrong, I'm not one of those individuals.
Tesla, the AI component of the story is full self-driving. It is autonomous vehicles. It is something that we've known about and has been in the market for a really long time. Why should we all of a sudden be applying that much more value to it in the last 8 months when everybody's been consumed with excitement about large language models?
Don't worry, I'll answer this one. It would be wise for the market to go ahead and assess some value to this prospect, or you're going to have a massive jump, similar to what Nvidia experienced earlier this year, fueling the bull market. When Tesla adds the money from full self-driving beta to their revenue, that Nvidia rise will pale in comparison to what Tesla's expectations would be when you're talking about vehicle margin. Tesla's gonna go vertical. I mean, that's good for me, but failing to put Tesla's value in context is what drives this volatility. There's one thing to be skeptical, but then there's another thing to be downright obstinate.
It's a great question. We've known about it, and we seem to be getting a lot closer to this actually hitting the penetration rate that will stoke demand even further. But importantly, I think the stock got to $100, not because people were concerned about AI, but they were concerned about vehicle demand, right? So right now what we've seen is expectations came down quite a bit in the winter of last year. Since that time, Tesla cut prices. It's worked. They've gained unit share. They've got their footing back. And what we've seen is the pendulum swing way too far into the negative camp. And right now, not only has demand stabilized, right? Margins could get better over the next 1-2 quarters. And like we just talked about over the long term, we have the Cybertruck being released at the end of this year in small volumes. And if you look out a few years, there's a lot of earnings power here. A lot of the stocks that we talk about in our group don't really have earnings power. We cover sustainability. These are very young companies, but Tesla, who we term the sustainability behemoth, has real earnings. And if you compare it to that group of stocks that we call the Man Group, the 6 large cap tech companies, it's incredibly attractive for the growth. And it always has been. I mean, when we initiated on the stock last year here at Canaccord, the discount was even more. And today it's narrowed a little bit, but the stock has underperformed the Man Group on a 1 to 2 year basis. And we think that has a lot more room to run.
You've mentioned, George, the margin several times, and obviously they did sort of underperform even their own target. At what point, though, does that become a concern if they don't begin to improve it? I know when you're looking at growth, sometimes margins can be overlooked, but at some point, you have to want to see that build.
I think you have a really good point. And so far, so good on Tesla's strategy of cutting prices and improving unit volume, but the razor blade model that we've talked about, selling units and eventually selling the software, we don't know yet. I mean, if it doesn't take off, this AI software, if the FSD software over the next, call it 2-3 years, and they don't get that margin boost, then
2 to 3 years? Let's talk 2 to 3 quarters. I'm just playing. Unless you're gonna do it.
Successful. We think it will. We think it adds a lot of value to consumers and to the world in terms of sustainability. But the jury's still out. We have to see if it happens. We're making the bet that the company has an incredibly powerful software suite, and that penetration rates will go a lot higher over time.
In conclusion, Tesla surprises Wall Street yet again. The bulls have come out to stomp and prance while the bears are furiously defending their positions, some at great cost to their self-respect. Keep bobbing and weaving, Craig. But that's all I got for you today. Be easy. Peace.